Hello, my name is Troy Atkins, and I am the founder and owner of Adkins Capital Management. I want to talk to you today about the key policy events that have transpired in the residential housing market for the quarter, to provide an assessment of the mortgage lending environment, and to provide an overview of the home price level for a select group of cities throughout the U.S. The purpose of this quarterly presentation is to bridge the gap in the residential housing market, where deficiencies in education, public policy, regulation, product structure, and personnel have created an environment where prospective homebuyers need objective information and useful analytical tools in order to help them make a prudent home purchase decision. This presentation was produced by Troy Atkins. I am the founder and owner of Adkins Capital Management. Adkins Capital Management is a privately owned and independently operated company. Our exclusive focus is on residential real estate. Our company is not affiliated with any parties associated with the residential housing industry. As a result, we provide objective information and useful analytical tools that help prospective homebuyers make a prudent home purchase decision. For more information about my background, skills, and experience, please review the introduction section on the Adkins Capital Management website. Let me now turn your attention to the primary events that have transpired in the residential housing environment. For the third quarter of 2016, the crackdown by the U.S. Treasury Department on anonymous real estate buyers hiding behind shell companies in order to maintain anonymity of their home purchase transactions was the primary topic of discussion. The geographic targeting order examination, which was conducted by FinCEN, is part of a broad effort by the federal government to crack down on money laundering activities. The Temporary Treasury Initiative requires title insurance companies to identify all cash buyers of certain high-end real estate transactions in New York, Florida, California, and Texas. The Treasury rule typically applies to non-finance purchases of homes priced in the top 10% of their geographic housing market. The Treasury order went into effect on August 28th, but will only be in effect for 180 days. According to the New York Times, Treasury officials plan to collect data in the aforesaid markets and develop a permanent rule covering these types of home purchase transactions sometime in the near future. Permanent rules that mandate the disclosure of real estate buyers will likely place downward pressure on the price level of high-end homes that are for sale in the aforesaid cities. For the third quarter of this year, the following residential real estate trends were also worthy of attention and consideration. According to The Hill, the U.S. real estate industry generates more than 20% of America's annual GDP, employs more than 9 million people, and produces nearly 2/3 of the annual taxes raised by local governments for essential public services. Given the size of the U.S. residential housing market, prospective homebuyers need to take into account that elected officials, housing regulators, attorneys, accountants, mortgage lenders, home builders, and real estate agents have a vested financial interest in encouraging people to purchase a home. For example, the Royal Bank of Scotland Group was recently forced to pay $1.1 billion in order to settle National Credit Union Administration claims that it sold faulty mortgage-backed securities to U.S. credit unions. In this case, the mortgage-backed securities consisted of misclassified loans that were sold to investors. However, perhaps more importantly to prospective homebuyers is that in many cases, the underlying mortgage loans that made up the mortgage-backed securities consisted of low-quality loans that did not meet high credit quality standards. With these types of issues in mind, prospective homebuyers need to use the Adkins Residential Home Valuation Analyzer in order to help them make a prudent home purchase decision. For the third quarter of this year, the following residential real estate trends were also worthy of attention and consideration. According to housing research firm Zillow, 5 years after the U.S. housing recovery began, 5.9 million borrowers were still found to owe more on their mortgages than their homes are worth. This means that 12% of all homeowners that carry a loan are still underwater on their mortgage loan. In comparison, 30% of homeowners were underwater at the height of the housing crisis. Overall, negative equity rates are still well above normal levels and are equally spread across urban and suburban communities. As these statistics illustrate, prospective homebuyers need to use the Adkins Residential Home Valuation Analyzer in order to help them assess the likelihood of becoming underwater on their mortgage loan, the likelihood of them facing foreclosure, and the likelihood of them becoming overwhelmed by the costs associated with owning a specific home. Moving away from these issues and to an assessment of the mortgage lending environment, it is important to note that for the third quarter of 2016, the national average mortgage loan interest rate for a 30-year fully amortized fixed-rate mortgage loan began the quarter at 3.54% and ended the quarter at 3.35%. Since June of 2011, the national average mortgage loan interest rate for a 30-year fixed-rate mortgage loan has been less than 4.61%. In order to better assess the current mortgage loan interest rate environment, prospective homebuyers should remember that the national average mortgage loan interest rate for a 30-year fully amortized fixed-rate mortgage loan reached an all-time low of 3.31% in November of 2012, and it reached an all-time high of 18.63% in October of 1981. While the Federal Reserve elected not to raise the target federal funds rate during the Federal Open Market Committee meeting, the Fed is expected to raise the target rate by the end of this year. Prospective homebuyers should closely follow the level of mortgage loan interest rates in their community, because a rising cost of debt will increase the amount of interest expense that homebuyers will need to pay for their mortgage loan. This in turn will place downward pressure on the price level of residential housing in their community. With this in mind, prospective homebuyers need to use the Adkins Residential Home Valuation Analyzer in order to assess the impact of a changing interest rate environment in order to help them make a prudent home purchase decision. Now that I have provided an overview of the events that have taken place in the residential housing environment for the quarter, let me turn your attention to the proprietary financial methodology and cloud-based analytical tool that can be used to provide an assessment of the price level of homes in a community. The Adkins Residential Home Valuation Analyzer is an internet-based software application that analyzes the relationship between the median home price level for a city and the median household income level for the city. With this information, the software application takes into account the most recent month-ending national average mortgage loan interest rate for a 30-year fully amortized fixed-rate mortgage loan, and the assumption that no more than 28% of pre-tax household income should be spent by homeowners in order to repay the principal and interest costs for their mortgage loan. By utilizing this information, the Adkins Residential Home Valuation Analyzer can accurately assess the price level of homes in a city. From the first analytical perspective, the Adkins Residential Home Valuation Analyzer determines the level of underpricing or overpricing of homes in a city by calculating the mortgage loan interest rate that justifies the price level of homes in the city. With this information, the justified mortgage loan interest rate is compared against the national average mortgage loan interest rate in order to accurately assess the level of underpricing or overpricing of homes in a city. From the second analytical perspective, the Adkins Residential Home Valuation Analyzer calculates the percentage of household income that would have to be spent by the people that live in a city in order to justify the price level of homes in the city. With this information, the justified percentage of household income amount is compared against the traditionally accepted household income amount of 28% in order to accurately assess the level of underpricing or overpricing of homes in the city. By utilizing the Adkins Residential Home Valuation Analyzer, prospective home buyers can determine the level of underpricing or overpricing of homes in a community in order to assist them in making a prudent home purchase decision. For more information about our finance-based analytical methodology and the Adkins Residential Home Valuation Analyzer, please watch our Review of Residential Real Estate Analysis Valuation Methodologies movie presentation and our Residential Real Estate Analysis Software Application movie presentation. Both of these presentations can be found on the Adkins Capital Management website. Now that I have provided an overview of how the Adkins Residential Home Valuation Analyzer is utilized, let me provide an overview of the home price level for a select group of cities across the U.S. For the third quarter of 2016, 13 cities that make up the Adkins 60 City Home Price Index were classified as overpriced for the quarter. The top 5 overpriced cities were San Francisco, New York City, San Diego, Seattle, and Los Angeles. In terms of a relative price level analysis, it is not possible to justify the home price level for the top 5 overpriced cities by reducing the mortgage loan interest rate from 3.35% to 0%. Therefore, in order to classify the homes in the top 5 overpriced cities as underpriced, it would need to be deemed prudent by prospective home buyers to spend more than the justified percentage of household income amount. As an alternative, in order to justify the median home price level for each city, the median required household income level would need to increase to a level within the respective range of $85,845 and $208,521. Finally, based on the median household income level, the quarter-ending national average mortgage loan interest rate, and the assumption that no more than 28% of pre-tax household income should be spent in order to repay the principal and interest costs of a mortgage loan, the justified home price level for the top 5 overpriced cities fell within a respective range of $296,425 and $445,580. Prospective homebuyers should use the Adkins Residential Home Valuation Analyzer in order to accurately assess the level of overpricing or underpricing of homes in their community. On the other side of the spectrum, 47 cities that make up the Adkins 60 City Home Price Index were classified as underpriced for the third quarter of this year. Buffalo, Detroit, Milwaukee, Memphis, and Huntington were identified as the 5 most underpriced cities in the index. While Huntington has the same justified percentage of household income amount as Wichita, Huntington is ranked as the 5th most underpriced city in the index due to its higher justified mortgage loan interest rate amount. Moreover, in order to classify homes in the top 5 underpriced cities as overpriced, the national average mortgage loan interest rate would have to increase from 3.35% to more than the justified mortgage loan interest rate amount for each city. Or, it would have to be deemed imprudent by prospective home buyers to spend as much as the justified percentage of household income amount in order to repay the cost of a mortgage loan. Prospective homebuyers should use the Adkins Residential Home Valuation Analyzer in order to accurately assess the level of underpricing or overpricing of homes in their community. Given the events that have transpired in the residential housing market, and taking into account the fact that buying a home will likely be the largest single financial transaction that prospective homebuyers will ever make, and the bulk of their net worth will likely be tied up in their home, prospective homebuyers should use the Adkins Residential Home Valuation Analyzer in order to analyze residential real estate from 5 financial perspectives. By assessing residential real estate in this manner, prospective homebuyers will be able to make a prudent home purchase decision. For more information about the Adkins 60 City Home Price Index, to watch our catalog of residential housing movie presentations, and to subscribe to use the Adkins Residential Home Valuation Analyzer, please visit the Adkins Capital Management website at residentialrealestateanalysis.com. Thank you for taking the time to listen to this presentation.